Okay, now speaking of concentration and fears of overvaluations in the market, is the market just the Mag 7? Investors are worried about the tech concentration as a major risk, and this is something that we have covered ad nauseum here on this show, and I'm sure we will continue to talk about this for the rest of the year as well as into 2026. The AAII Sentiment Survey just confirmed what every investor scrolling X already suspected, or everyone that tunes in our show. A growing number of retail investors think the stock market has shrunk from 500 companies to roughly 7. The Mag 7, in fact, Apple, Amazon, Alphabet, Meta, Microsoft, NVIDIA, and Tesla. We also have the Mag 10 being thrown around now, which of course adds AMD, Broadcom, ticker AVGO, and Palantir. These dominate returns, headlines, and portfolio anxiety. And now investors are saying the quiet part out loud. This concentration is actually becoming a major risk. More than a third of AAII respondents labeled megacap tech dominance as a major concern, and another third called it somewhat concerning but manageable. Translation: investors aren't panicking, but they're definitely tightening their seatbelts. Now, a quick glance at how our audience handles the day-to-day here, and you see that this is exactly right. We have a number of folks here that like a certain amount of stocks, but still think the market might be coming in, still think some of these might be overvalued, but their long-term premise is still intact. We often talk about diversifying as a topic here, maybe moving into a really good example of this is the AI trade, right? Instead of just loading up an AMD or NVIDIA, we talk about picks and shovels in the data center play, the infrastructure play. And I think that diversification is actually going to do well for the market. And it looks like there are others that are going to follow that. So if we can be early, that can actually benefit our own trade. Even with the mega cap jitters, sentiment overall improved this week. Bearishness finally eased off of its near year-long perch, while bullishness and neutrality both inched higher. But don't mistake that for enthusiasm, because bullish sentiment remains stuck below its long-term average, and neutral sentiment is still deeply depressed versus history. That profile, slightly less fear, not much more conviction, fits the moment perfectly. Yes, pessimism is pulling back, but no, Main Street isn't suddenly excited about valuations perched on the shoulders of 7 giants. That's a really well-written paragraph. I completely agree. Investors looking for sentiment-driven mean reversion typically start scanning broad ETFs like the S&P 500 SPY and the Vanguard ETF VOO, or the equal weight Invesco S&P 500 equal weighted ETF, the RSP, which historically outperforms during transition fear to cautious optimism. While investors openly question whether the S&P 500 has effectively become the S&P 7, ETF flows are now starting to reveal a quiet rotation. And we have a guest to talk about exactly that here today. Funds like Invesco's 500 equal weight ETF or the RSP look appealing for investors who want to de-risk concentration. Small cap and mid cap ETFs like the IWM and the iShares Core S&P Small Cap ETF, the IJR, and the MDY become natural escape hatches for those betting the rest of the market eventually wakes up. Meanwhile, for those who believe megacap dominance is simply the reward for unmatched earnings power, sticking with the Qs or the QQQ or the technology sector XLK remain the conviction trade. The AAII survey paints a picture of market uneasy with its own imbalance. When 7 stocks steer the index, sentiment becomes hypersensitive and rotation moments become profitable. For investors, the message is simple. This isn't about fleeing tech. It's about recognizing that when the market narrows, opportunity widens elsewhere. And this is exactly what we have been trying to prepare you for here on this show. I am expecting more really big AI-related IPOs next year. Right off the top of my head, I would think of Anthropic, Databricks, and OpenAI. It almost doesn't even matter when we get them. I do think 2026 will see all of these companies brought to market. And I would imagine, given the AI trade here, that there's going to be significant, let's call it diversification into some of those names. Think about it if you were a fund manager and you were up and most of your gains are in stocks like Google, Apple, Tesla, any of the Mag 7 names. What would you, if there was a hot new company that you think is going to do really well, what would you do? You'd probably trim some of your winners and then roll that money into some of these new companies. And I suspect we are going to see some of that on a fairly larger scale coming here pretty soon.